Most beginner traders focus on trying to predict the market, guessing on when to buy or when to sell. But here's the truth. If you don't understand your risk to reward ratio, nothing else matters. It's not just important, it's the foundation of everything in trading. So stick around, because in this video I'm going to explain to you step by step what risk to reward means, how to use it, and how to adapt your strategies. So most of you have probably heard the term risk to reward ratio before, but let's actually see if you understand what exactly is meant by risk to reward. So the risk to reward ratio measures the potential reward of every unit of risk taken in a trade. The purpose is that it helps traders evaluate whether a trade is worth to be taken or not. So I am going to show you a real example here on NASDAQ measuring the risk to reward. So let's just assume we want to take a long trade here on the NASDAQ. I'm going to use the risk to reward tool here in TradingView, which is going to measure the risk to reward automatically, but nevertheless we have to clarify what is actually meant by that. So what we can see, if we were to take a trade here on the NASDAQ, this is giving us a 1.84 risk to reward ratio with a stop loss below this low and a target. Let's actually use the all-time high on NQ. This is going to adjust the risk to reward ratio with a 2.7. So that means our potential reward of this trade is 2.7 times the amount of risk we are taking in this trade. Okay, so whenever we have a risk to reward above a 2-to-1 ratio, it means that a trade is worth to be taken. Let's have a look at this here on NASDAQ. Our risk is whenever price is in this zone down here, this would mean our position is in the loss. Before we take a trade, we want to know exactly how much we can potentially lose in this trade. Okay, so let's just assume we take it on a 1 contract position size. And then we can see how many ticks is this stop loss away. And what we can see here is that this is 400 ticks away. On NASDAQ, for every tick, we risk $5. So that means we have to calculate 400 times 5. And in this example, this is going to be a risk of $2,000. So let's just see, or let's write it down here, and then let's see what the potential reward is going to be on that trade. So the risk is going to be $2,000. So for it to be a 2-to-1 risk to reward ratio, we at least want to make $4,000 profit. So risking 2,000 to potentially making 4,000, this is a trade that is worth to be taken. And in this particular example, we can measure the tick size of our target. And for this instance, let's just say it's around 1,000 ticks. So for this example, we have an expected potential reward of $5,000. So that means we are risking $2,000 to potentially make $5,000. Now I'm going to show you why it is very important to be aware of the risk to reward ratio and set it in relation to your win rate. So even with a lower win rate, a good risk to reward ratio can lead to profitability. For this, I want to show you a graphic. So what we can see here is that with a 1-to-1 risk to reward ratio, that means if we risk $100, we expect to make $100 in this trade. We need to have a 50% win rate to even be break even. So we need a 60% win rate to be profitable. If we, however, have a 2-to-1 risk to reward ratio, so if we risk 100, we at least expect to make $200 on this trade, we only need a 40% win rate to be profitable with this strategy. And what we can see here is that if we go down the list here and we actually use a 4-to-1 risk to reward ratio, that means that even with a small win rate, like a 30% win rate, we can achieve profitability when focusing on the risk to reward. So dependent on your strategy, if you are aiming for a higher win rate or a higher risk to reward, you have to adjust your expectations of a trade. And using a consistent risk to reward ratio helps to maintain steady performance. So for me, for example, I am always at least aiming for a 2-to-1 risk to reward ratio, because I have identified that for my strategy and the strategy I'm using, I have a fairly high win rate. So a 2-to-1 risk to reward ratio is what I should at least be aiming for, preferably even more. So now let's also have a look into how to incorporate risk management strategies into this risk to reward tool. So before we take a trade, we should agree with ourselves on a specific amount of money we can allow ourselves to lose in every single trade. So for me, that is 1 to 2% risk of my entire portfolio per trade. So when I am risking a trade, I am never risking more than 1 to 2% of my portfolio. Okay, so let's just say this is the maximum potential that a trader identified for his trade. If the stop loss is still down here, there is some things and tweaks around it how you can achieve a better risk to reward by having the same target. Because we can clearly see prices forming lower highs, so we should, for a trade, not necessarily aim for a new high. So what we can do is also adjust the stop loss, and what we can see here that this is increasing the risk to reward to a 3.1 risk to reward. So that means if we are, for example, risking 100 on this trade, we are at least aiming to make 300 on this trade. Now, one thing we have to keep in mind is that we should not keep the stop loss too tight, okay, just to try and achieve the best risk to reward ratio, because this, for example, is giving us a 70.7 risk to reward ratio, but there is a very high probability to be stopped out of a trade like this. So we should always keep a realistic stop loss as well as a realistic take profit and target for the trade. So let's now summarize. For a trader to ensure a profitable system over the long term, it is essential to understand risk to reward and align the risk management with this risk to reward tool. You have seen that even with a low win rate, a trader can achieve profitability if there is a good risk to reward with his system. So I hope you now understand how crucial risk to reward ratio is, and I hope that you can now avoid the common pitfalls many traders do. You are now ahead of the journey, so stick around because I'll be delivering 2 beginner videos every week. So see you in the next one to elevate your trading journey. Goodbye.